While buyers continue to struggle with rising real estate prices, we're about to see the biggest changes to Canadian mortgage rules in over a decade, which means buying a home just got easier. This is designed to help more people get into homes, but is this truly part of the solution? Or will this end up having long-term adverse effects on Canada's housing market? In today's video, I'm going to break down 3 big changes to the Canadian mortgage rules, along with reviewing a couple changes specific to Nova Scotia, which will in turn make buying a home easier, especially for first-time buyers. But just before I get into it, if you're new here, my name's Andrew Stevens. I'm a realtor in Halifax, and if you want to be educated on the Halifax real estate market, then hit that like button and hit that subscribe button. And if you're thinking about making a move in the HRM and you want to get in touch with me, you can reach out to me anytime in the Calendly link below. Now, like I said, these are the biggest changes to Canadian mortgage rules in over a decade. And if you're thinking about buying a home in 2025, there are certainly changes that you need to know about. Not just how this may affect you personally as a buyer, but also how it may affect the housing market moving forward, which I'm going to get into that in a little bit. So make sure you stick around. So change number 1, as of December 15th, you can now have, as a first-time home buyer, a 30-year amortization on your mortgage. Now, this doesn't just apply to first-time home buyers, it also applies to any buyer who's looking to purchase a new construction home with less than 20% down. Now, to give you some context, this can help increase a buyer's purchasing power by up to about 9 or 10%, which may not sound like a lot, but when you're dealing with these big purchase prices, it is a lot, especially if you're a first-time home buyer trying to sneak into the market at kind of a lower purchase price. All right, moving on to change number 2. And again, as of December 15th, 2024, they've increased the amount of purchasing power for default insured mortgages. So a default insured mortgage is a mortgage that's anything higher than 80% loan to value. So in other words, if you're putting less than 20% down. Now, the previous limit for this was just under $1 million, and now the new limit is just under 1.5 million. Now, this is a pretty huge change to the rules. It's a pretty big amount that they've changed this by, and it hasn't changed since 2012. But I don't see it as having a huge impact here in Halifax based on our purchase prices. But when you look at the bigger markets such as Toronto and Vancouver, I see this as having a much larger impact there when you consider what their purchase prices look like. Again, for context, a minimum down payment for $1 million home is now $75,000. It was $200,000. Or if you're looking at a $1.2 million home as another example, it was $240,000 and now it's only $95,000. So you can see what type of an impact this could have in markets with higher purchase prices. All right, moving on to change number 3. This allows all mortgage holders to switch lenders at renewal without being subject to another mortgage stress test. Not having to requalify when renewing with a different lender increases mortgage competition and enables more Canadians with insured mortgages to switch to the best, cheapest deal. Now, especially in a climate where rates are not expected to continue to climb, I think this is a real positive change. I do understand that a lot of people hate the stress test, they think it's stupid or whatever, but in a climate when rates are going up, it's certainly a good thing because in theory, this is meant to protect the consumer. But as rates are coming down, I really don't see it as something that makes sense. So I do think this is a positive change, and it's probably going to allow for a lot more competition within those mortgage renewals. Now, moving on to some of the Nova Scotia changes specifically that I want to talk about. The first one is as part of the Conservative platform when the election was going on, they said that they're going to bring in new mortgages through credit union that are going to be 2% down instead of 5% down for first-time home buyers. So this is obviously a huge change and it could be awesome, but I'm not really holding my breath on it. I'm really interested to see what the qualification parameters are going to be like, what the interest rates are going to be like, and all kinds of things like this. So could this help? Yes, absolutely. It could be a great new package that buyers can use to get into their first home. But like anything with the government, I'm a little weary about what the terms might look like. So maybe this pans out in a real positive manner and maybe it doesn't, but we'll just have to wait and see. And change number two, which already occurred earlier this year, but I wanted to add it in as it really goes with what we're talking about in this video, is that the Nova Scotia Down Payment Assistance Program has seen major changes earlier this year, and they increased the max purchase price in HRM for this program from $500,000 up to $570,000 to account for the differences in the price points that we've seen escalating over the last several years. So the question is, should you be taking advantage of any of these programs? Well, honestly, I really think that it depends on your situation. Let's put it this way. If you're really finding it difficult to get into a home and you're trying to limp in maybe in the high 300s or low 400s and it's really difficult, and if you had just a little bit more purchasing power, this would help you get into a home. Maybe the 30-year amortization mortgages are for you. Maybe the Nova Scotia Down Payment Assistance Program is for you. But maybe it's not. And it really depends on your own situation and what your finances look like and what your personal situation looks like. But just know with a lot of these programs, you're going to be paying a lot more interest in the long term. But if it helps you get into the market 3, 4, or 5 years earlier, then maybe it is the right program for you. These are all serious conversations you should be having with your mortgage professional. And if you don't have a mortgage professional and you would like to reach out to one of my go-tos, you can reach out to me anytime and I can help connect you with a mortgage professional to get you off on the right track. Another question would be, is this going to have a negative impact long term or a positive impact long term? And that's a difficult one to answer, but here's sort of my thoughts. Right now, this is coming at a time when rates are on the decline, and this is starting to put a little bit more demand into our market. But demand has never really been the huge problem. The problem is supply. We do not have nearly enough supply for the demand that we currently have in our market. And as more demand goes into the market without more supply to account for it, this may have upward pressure on pricing. By making these mortgage changes, it's going to, in theory, allow more people to qualify for homes, which, yes, obviously is a good thing to some extent. However, by increasing the demand, again, this may have upward pressure on pricing long term. And while these changes are certainly helpful to certain individuals in certain circumstances, by increasing the demand and having that potential upward pressure on pricing, it may kind of push more buyers out of the market and might have more harmful effects on the market if the prices continue to go up in an aggressive manner. It might kind of be a wash at the end of the day. So in other words, it may allow some more buyers to qualify, but then if the prices go up even further again, it may pull more buyers out of the market, which is kind of a wash at the end of the day. Now, I know what a lot of you might be thinking is that a lot of people are out there, screaming at the government for them to make changes to make housing more affordable. And then they do something and then everybody rejects it saying it's a stupid idea and it's not really going to help. It's going to help boost the purchase prices like I'm talking about in this video. And yes, that is the case, but you got to think of it from this perspective. We have too much demand for the supply that we currently have. This is a Canada-wide problem, not just in Nova Scotia. Now, with that being said, a lot of the changes the government is making is injecting more demand into the market, not more supply. So I don't necessarily think that it's not done with the right intention. I think they're just coming at it from the wrong angle. And that's not to say they're not doing some things to increase supply. Of course they are, but a lot of the things they're doing are increasing demand. So this is sort of the vicious cycle, right? House prices are going up, less people can afford them, everybody's screaming about it, the government makes a change, that change adds more demand to the market, not supply. As more demand enters the market, the prices continue to go up, and then the vicious cycle kind of starts all over again. Now, I just want to reiterate that buying a home based on these kind of changes is easier, but it's not easy. There is still a big hill to climb when you're purchasing a home, especially if it's your first home in Halifax and you're looking anywhere in that kind of sub $500,000 price point. So if you're looking to purchase a home in 2025, I would highly recommend that you reach out to a realtor for guidance, whether it's me or somebody else who you know, like, and trust. Now, if you're still here watching, you obviously have some interest in this video, and I'm curious to hear what you think in the comments below. Do you think this is going to have positive impact going forward or negative impact going forward? And if you're still here watching and you got any value out of this video, all I ask is that you hit that like button and hit that subscribe button so you don't miss any of my future content. And that'll help push this out to more people like you who may be interested in being educated in the Halifax and Nova Scotia real estate market. And until next time, thank you so much for watching. I really appreciate your support and have a great day.